The stats are out, and definitely the peak was locked in, and we're starting to have a balanced to decreasing market. Hi, everyone. This is Christine Kopr, Senior VP of Sales with Sotheby's International Realty Canada in Vancouver, BC. And I'm going to give you our July market update. Let's take a look at the numbers and see what they say. As you know, every month I like to go through this table. I think it gives you a really good understanding of what's happening in the marketplace. So in July, we clocked in at 1,887 sales. That's down 23% month over month, but also a 43% decrease year over year from July of last year. So a significant decrease in sales. Keep in mind that last year had the highest sales of all time across the entire year. It's no doubt that we're going to see lower sales. However, in perspective, these sales are also 35% below the 10-year average. So a 43% decrease year over year in sales, 23% decrease month over month from June, and overall a 35% decrease under the 10-year average, when in March at the peak, we're clocking over 10-year average in terms of sales. Now, the next factor we want to look at is listings, new listings coming on the market, because that's going to impact inventory. And new listings came in at 3,960. That's down 25% month over month, and is also down 9.5% year over year. So that's looking good. Not as much inventory is coming on the market, and it's probably because some sellers have clocked in some really good gains and they're wondering, do I just wait this out or do I sell now? Just depends on what their situation is. And overall, we want to look at active listings, the amount of homes available on the market. So new listings were new homes that came on in July. Active listings are the accumulation of listings that have not sold and are available to buy today. And we're sitting at 10,288 listings. That's actually down a little bit, 1.3% month over month, but inventory is up 4.5% year over year. So nothing huge. Inventory is staying stable. This is one of the very positive things in the market currently, and it's something we need to keep our eye on, especially with the sales volume, because even if we are in historic low inventory, this is historic low inventory over the 40 years of our real estate board. However, if the sales remain at 1,000 or 1,500, even 2,000, we're going to be looking at a balanced market or dipping into a buyer's market, as I'm about to discuss. So months of inventory is the big barometer I like to look at. This is the overall market for Greater Vancouver. We're sitting at 5.5 months of inventory. And you might ask, well, what does that mean? So if you recall, 4 to 6 months of inventory is considered a balanced market. Below 4 months of inventory is a seller's market, and above 6 months of inventory is a buyer's market. More inventory, lots of months compared to the amount of sales and demand that we have in the marketplace. And it's a very good indicator over a sustained period of where prices are going to go. And you can see that we were in super low inventory, below 4 months of inventory for a very long time, as I'll show you on other slides. And then we started to enter a more balanced market, which is where we are today. And that is probably a trend we're going to see continue. Benchmark price is 1.207. It's down 2.3% month over month. However, it is up 10% year over year. So the benchmark price, most properties are still up and in double digits year over year. However, we're starting to see some more recent declines in pricing. So in summary, we're starting to see a cooling down of sales, which is going to impact the market. And we're starting to see a bit of a price correction across the board. And we're going to take a look at those numbers, detached townhouse condo, in just a second. And what I wanted to bring to your attention, we did it in one of our last videos, is just take a look at these sales. 1,887 sales. If we go back, you can see we were very high sales. This was a record year in terms of sales, not like nowhere near under 2,000 sales a month. And when we dip back, this is very reminiscent to me of when we had the big mortgage change, which happened January. This is 2018, when the stress test came in. We started to feel it here in May and June. It took, those 3 or 4 months to have that impact. And you can see that we started to see sales volume taper off and an increase in inventory, or slight increase in inventory. And of course, you could start to see we went from a balanced market slowly into a buyer's market. And it feels like we're trending that way, particularly with the aggressive interest rate increases that have been occurring over the last few months. How many interest rate increases we have had just this year? It's been very significant, 2.25%, all in the last 6 months here. So it is a big change, and I think it's still going to take some time to filter through and see how it's going to impact the market. Not everybody is impacted. If you purchased a year or two ago and you're in a fixed rate mortgage, you have 2 or 3 years to see how this is going to go out. If you're in a variable rate mortgage and an adjustable rate mortgage where the price goes, or your mortgage payment goes up and down depending on the interest rate, that is going to be probably impacting some people who took that option over the last couple of years. Now, when we think about 2018, however, I remember clients getting rates at around 3.5%. Now we're north of 4%. However, it's not too drastically different from that point in time. Obviously, market sentiment also has an impact on this. We don't see any fire sales or anything like that at this time, nor do we have any distressed seller type of situations. Foreclosures are still historic lows. I mean, this is just a very short-term change in the marketplace. It's going to need to take some time to see how this plays out. So in terms of looking at the overall product type, what's doing well, what's not doing well, you can see here, detached home, the sales year over year are down 50%. Obviously, the higher price tags are going to slow down the most, particularly when you have to finance. Benchmark price is sitting at about 2 million. It's up 11% year over year, but down 2.8% month over month. Townhome sales are also down 50%. Benchmark price is sitting at $1,096,000, so just under $1.2 million. The benchmark is up 16% year over year and is just down 1.7% month over month. So we're just going to need to see what happens here over the next several months. Attached for condos, sales are down 36% year over year. Your benchmark price is $755,000. Prices are still up 11% year over year, and the benchmark is down 1.5% year over year. We're going to talk a little bit about the economics of things at the end of this video. I just wanted to go through my Snap Stats, which we send all of our subscribers every month, complimentary. You can take a look at them. It actually breaks down each neighborhood so you can see what these numbers are. And if you're in that neighborhood, perhaps you are just an owner of real estate, you haven't really thought about selling, but you want to know what's happening in that marketplace, you're thinking about buying in a particular neighborhood or price point, it will show you what's going on into those specific neighborhoods. And of course, I'd be more than happy to connect with you to discuss all these different factors right now and do a complimentary consultation based on whatever your goals are or ideas that you want to discuss. So this is what the Snap Stats look like. It also breaks down the sales individually rather than doing the months of inventory, which is the amount of inventory divided by the amount of sales. So how much inventory is there? If sales take the same, how many months will it take to sell through the sales? This is per listing. And basically, it's the absorption rate. So if you have a sales ratio of 21% or higher, you're considered a seller's market. If you're below 14%, this is for the Real Estate Board of Greater Vancouver, you're in a buyer's market. Fraser Valley is a little bit less. So we're just going to take a quick peek here at condos and townhomes. And then we're going to look at detached west side and east side to see how they're faring. So this is what the report looks like. You can see it's broken down by community and price range. And the total here, we're looking at a sales ratio of 17%, which basically, puts us into a balanced market, okay? And you can see here, this was the trend over the last year since last July. The peak was clocked in at March, February for the sales ratio, and we've slowly tapered off. And now we're sitting at 5.8 months of inventory. So almost in buyer's market territory. So for anyone considering making a purchase, you're now entering favorable market conditions to get into the market for this type of product. Here's the last year's trend. So you can see a year ago, we were at 4.2 months of inventory. You can see the sales price here started at $749, ended at $810. In the peak of the market, we were down to 2.4 months of inventory, and now we're sitting at 5.8 months. So that's a big swing from March until July. So you can see that the downward trend is starting to kick in. Let's take a look at detached because, of course, condos are faring a lot better. West Side detached. A year ago, we were at 7.5 months of inventory. Peak market, we were at 4.8, and today we're at 13.7. You can still see that prices are still up 3.2% for a West Side detached home back a year ago. Today, we're still at 3.460. And Vancouver East Side, sitting at 10% in terms of sales ratio. So we're now entering buyer's market conditions. That's gone from a balanced market to a buyer's market between June and July. We are entering summer, so it is not unusual to have a little bit slower sales during the summertime. However, there are these overriding market conditions. Peak was back in March at 40%, and we're sitting at 9.7 months of inventory. And again, here, a year ago, we were at 3.8 months of inventory, got down to 2.5 in the spring, and now we're at 9.7. So again, a very big jump in terms of months of inventory, even more drastic. You can see price point, we're sitting at 1.790 for a detached home on the east side, up still from 1.689 a year ago. So let's keep an eye out and see how that fares over the coming months. We can do this for condos and townhomes and break it down into your neighborhood. So of course, please feel free to reach out to me to get this information, or just sign up on our website, or just send me an email to request these snapshots. They're complimentary. We'll give them to you every month from Vancouver all the way out to the Fraser Valley. In summary, these are the factors that are impacting our current marketplace, and as well as a little graph to show you what's happened on Vancouver detached pricing. There's definitely already been a decrease. You can see the 3.5 to 4, under 3.4 in terms of pricing. We're starting to see the decrease in pricing across all product types, as we discussed earlier in the video. The things that are negatively impacting the market are the interest rate increases. We did have the BC cooling off period announced. It's going to be in play next year. And of course, we're starting to see less confidence in the marketplace. In terms of other factors that are still sitting out there is the 2-year foreign buyer ban and the higher taxes if you're going to sell in a year. But ultimately, what this is really coming down to is inflation. Bank of Canada and the Fed in the US are struggling to get inflation under control, because that's the indicator for how expensive your life is. And they've determined that around 2% is where they want to be, whether that's actually a real number or not, because the CPI index is a little bit of a farce, in my opinion. However, the fact is that even if the CPI index, which is kind of underreports inflation, is sitting at 8 to 9% here in Canada and US respectively, there is serious inflation going on in the marketplace, which we have all experienced, whether it's been your house prices, your gas prices, your food prices, and they need to get it under control. The only way they can do that is by raising interest rates, because it's going to impact consumer psychology and demand. It's going to make things more expensive. So you're going to spend less money, you're going to buy less property, you're going to do less renovations, you're probably not going to go travel on your credit card. And companies are going to invest less because it's going to cost them more. So we're trying to take out the demand. Of course, we've had record money printing and government handouts throughout the COVID period. I mean, retail was flying off the hook. Supply chain is a real issue because people really want to buy things because they have the funds. Now that's going to start to change. So hopefully the psychology part of it is going to help with decreasing inflation, because right now, even though we've technically had contracting quarters of GDP growth, which is technically a recession, we still have record employment. There are more people employed than ever, and restaurants and companies can't find people to come and take jobs. So it's a very interesting time. If you want to discuss your options and plan and think about what kind of mortgages you should explore, whether now's a good time to get in the market, quite frankly, we're starting to see some softer prices and times for you to do your due diligence. Depending on your situation, this could be a great time to start considering making a purchase. And if you're thinking about selling, depending on your situation, if there's an imminent need, or you want to lock in some good gains because we're still up over year, and that could potentially change, now might be the time to consider what that could look like and what your options are. I welcome the opportunity to connect with you. You can always reach me by phone, text, or email Christine Kopr at christinekopr.com or ckopr at sothebysrealty.ca. Please check out my YouTube channel. We will be adding additional educational information on there. And if you're not already, please subscribe below. See you next month.